Today I'm joined by Ryan Littlestone. He's the Managing Director of Forexflow.live. Happy New Year to you, Ryan.
And to you,
Nick. And
Nick.
your family. Right, let's kick off with two slides you sent. First of all, the euro against the US dollar. Seller for choice?
At the moment, we've just had a little break through 120, so it's looking a bit soft at the moment. We've been bouncing in the new year, sort of between 120, 121. I believe just now we've just tucked up back against 120, so we've been down a bit, had a little break, back up again. But it's looking like the downside beckons for now. At the moment, you know, we're not really doing anything. There's not real news behind any of these moves. It's still the early year, liquidity still coming back. One thing that's lacking is volatility. It's very low at the moment, and that's not good for trading. So,
Right.
you know, if we fail to make the upside and hit that 121 level again, then, you know, the pair's only going to go one way, and that's down. So
you were bullish on euro for as long as I can remember.
Yeah.
Are you changing camps at the moment?
I'm still bullish, but not strongly.
Right.
You know, we had a great run last year,
Yep.
as you know. It's you can't rest on your laurels. You always got to look what's going to drive the price or continue to drive the price, the trend in the same direction. The ECB, you know, they bought some time. You know, we're going to be sitting here till September until they decide what they're going to do about QE, the end of QE. So it's really going to be about the data. If the economy continues to improve, then, you know, the market's going to carry on buying the euro. The dollar side of the trade is pretty flat at the moment. You know, we've had the hikes, we've had the tax plans, and, you know, we're not busting a move higher.
Yeah.
And as we've seen since, you know, late last year and early this year, we've seen the euro rally, you know, 200-300 pips. So, you know, it's still all about the central banks that are doing action. They're still, you know, progressing and whether they're going to come out of their extraordinary policies, and the ECB is still one of them.
Okay, so basically a cautious bull on this slide. Let's move on to the second pair, the US dollar against the yen, dollar-yen. This is a messy chart, isn't it?
It's a messy chart, but it's another period of consolidation that we tend to see in this pair quite often. We're seeing one at the moment, short term, you know, going back to November, late October, November. You know, we're stuck in this you know, 100, 150 pip range, and it's just going sideways. And in between that, we've had, you know, Fed hikes, we've had tax plans from the US, and we're not going anywhere. Again, it's a sign of this low volatility that has entered the market. You know, when you think about it, you look back over the years, we had a big, huge crisis and volatility through the roof. Now we're coming out at the end. Central banks are normalising. There's only a couple that have got, you know, to get back to normal. And that just zaps the volatility because, you know, when you're talking about rate hikes, you're not looking at a 500 pip move anymore. The market, you know, it prices it in, and then when you get a rate hike, you might get 50, 60 pips out of it. I don't think we got that in December on the Fed hike. We didn't get a 50 pip move.
Right.
And that's reflected. So what you need to do, if you're getting low volatility as a trader, you have to adjust with the markets. You know, you look at that chart there, we're ranging 112, you know, 114 basically. Trade the edges. You know, you're not going to buy it here at market and wait for a 500 pip move because you're just not going to get it.
Right.
So, you know, if you're going to jump in, you've got to have some patience, wait for the good support levels, and trade them off against the resistant levels.
That sounds remarkably sensible advice. Ryan, thank you very much indeed.